2024 is running away from many investors. We've just seen the first quarter close at new all-time high prices across the board, around the world, across assets like the stock markets, gold, Bitcoin, and real estate. This is an everything bubble. Things are going to get even more extreme. In this video, we're going to take a look at the probabilities of what to expect coming up for this everything bubble and potentially how you or other investors are extremely underprepared for this last stage of the real estate cycle, the winner's curse. This is where things go ballistic. Hit the like and subscribe button. You found your home of macro cycle analysis. We cover the stock markets, real estate, Bitcoin, and cryptocurrencies. All right, guys, let's kick it off with the macro cycle, give us an idea of where we are. And I also want to do an update of our forecasts for 2024 to see how they are tracking 1 quarter into the year. So this is our 18.6 year cycle. We are roughly here as we head up into that final bend. This is the winner's curse stage of the cycle. It happens in the second half of the real estate cycle. As it says down here, the expansion, basically after the mid-cycle slowdown, that was around the COVID collapse. And as we head into this final stage, this is where things can get very, very heated. Basically, most people have got some sort of profits on the sideline, and that's where the psychology for these investors heads into uncharted territories for them. Hopefully, you're a little more experienced than that. What happens is, because they've got profits, they think they are legends and that they can continue on making profits no matter what comes their way. Everything is going up. That's the winner's curse stage of the market. You may have experienced it in cryptocurrencies, and as it is for all markets, it's basically human psychology. As we get into a bull market, everyone thinks that they are going to win and win forever, and they forget about what comes after that. But let's not worry about that. There could be another few years away. This is a winner's curse. This is a stage where most are still underprepared, and that's what leads into the big macro peaks that we see come towards the end of the 18-year cycles. This is what we've seen throughout history. This one is, well, at least this 18.6 year cycle, real estate and the economic cycle is for the US in terms of the dates. This goes back over 200 years of data to get to these particular dates. And for the UK, you can also find this goes back over 300 years of real estate data. So we'll just work on what we've currently got here for the macro cycle, the winner's curse. It's roughly about 2 years towards the end of the second half, which is essentially where we find ourselves now in a quarter two-ish now of 2024. The peaks throughout history have come around 72, 1989, roughly around 2006, 2007. We're forecasting somewhere around 2025, 2026 to be those peaks. We don't know for sure. We've got to wait until the market continues to give us evidence that we're coming towards that peak and that there might be a slowdown or a potential collapse after that point. So we're not trying to get too ahead of ourselves. It's just a guide at this point. Don't take that as a hard and fast that it must collapse at that point. This is just a guide. We'll continue to follow up on the channel. Essentially, what I'm showing you here is this last stage, why I don't think most are bullish enough, because a lot of people are underprepared and are underinvested, which is what's leading to this move higher and higher on the stock market with smaller corrections along the way, those 1% and 2% corrections that we've seen. But let's take it back to the macro play now and how much further these markets can go. That's going to help us identify more of the trend for Bitcoin, especially after it's done 7 green months in a row. Ethereum's also had a stellar several months as well, going up 5, 6, 7 months in a row as well, depending on how we will calculate those in just a moment. But the main thing I want to look at next is the moves to the upside in the second half of the real estate cycle for the stock markets. Bit of a mouthful there. Let's have a look at the second half here. 1960s, 1980s, 2000s, and where we currently sit. I've got an exponential moving average here, 48. So basically 144 months, 12 years. We're looking at a quarterly chart here. As I said, I just want to have a look at the possibilities of how far these markets can run up. In the past, from that exponential moving average for the stock market, it's run about 56% away from that exponential moving average before it basically paused and then rolled over. The times are going to be slightly different along the way in terms of what's happening throughout the economy. Of course, we all know from the 60s, 70s, you had that the inflation, and then the interest rates were basically peaking at 15 to 20%. We get into the 80s. Now we had the peak there before Black Monday, where we had a pretty significant collapse. Even so, out of that 1982 low, the furthest the market got away from this moving average, about 112% from that moving average before we had a pretty significant correction. And then when the recession happened in the 1990s, it was still able to move away 74% from the moving average. So I've used a 144 month, or basically 48 on the quarterly here. It gives us about 12 years of data, and using an exponential moving average weighs the data more so in the most recent years rather than the older years. We want the most recent years because the cycle tends to speed up towards the end, and we're not going to weigh it exactly the same throughout the entire move. That leads us to 2000s. You can see that from the second half, and I've just circled here roughly around that second half using the real estate and economic cycle, not necessarily the bottom or the top. From the moving average, it was about 40% up before it had its first stall. So you can see that we're on the Dow Jones here. It basically stalled out from 2004 for several quarters before it got another leg on into that final peak. So the cycle wasn't over. Many might have thought it was over, but it basically kept going from that point. Now, into that peak, it did about 49% from the exponential moving average before you had several red quarters into the recession, the global financial crisis, the GFC happened, and then bottomed in 2009, higher low 2010, higher low again 2011, and of course, the rest is history from that point. So that brings us to the current day, and how far are we away from the moving average? How much further could it go based on what we've seen in history? And then we'll have a look at the quarters as well, what to expect. From this point, how bullish should we be? Because of course, most are waiting for this correction. So you can see here, we're up 55.5% from the moving average. If you look back at the previous cycle, 49% was a pretty standard area before we had pauses or corrections. Cycle before that, well, you can see there 112, so it could do double from where we currently sit, or towards the end of that peak, it was about 74%. And then if you take it back to the 60s, well, it's basically right at the point where it should pause for the markets. Now, of course, there were significant corrections along the way. These would have felt like the end of the world if we were living through them. But of course, the price, if you just put a line straight through the middle, looking at averages, it basically didn't go anywhere until late 60s into the 70s. Could that be the case for now? Of course, I don't have the crystal ball. We are getting quite extended there at 55% away from the average. We take a look at where it peaked from 2022 to that line. We did about 67%. So could we go up to that 67% before some sort of correction? Sure, there's 43,000 points for the Dow. Currently sit close to 40,000, so not too far away from that point right now. However, we do have to note that we've just broken into new all-time highs. We've had very significant corrections along the way. Now this is pretty similar to the S&P 500 and to the NASDAQ as well. So it's relevant across all those stock markets. The main point to consider here are the quarters, the greens and the reds. Coming out of the cycle low of 2009 for the stock market, you've also got COVID bottom here in the 2022 low, but we're using the 2009 reference point as that's the end of the real estate cycle. And now we're into the current real estate cycle. You had several red quarters. After that point, you had basically a very long streak of green quarters, only interrupted by single red quarters until you got to 2015. Again, once those few red quarters happened, it was basically a long streak of uninterrupted green quarters, only interrupted by single red quarters, including the COVID drop, which, yes, was entirely manipulated by the government, by the Fed, but that's the entire market. It's all manipulated by everyone all the time. So we're not going to take that out of the equation just because it was COVID. Essentially single, single, single the rest of the time with all these green quarters. Tiny little red quarter up here, but it did not break the swing either. Then in 2022, we had 3 red quarters. After that point, I guess what could we expect? Potentially a long streak of green quarters, only interrupted by single red quarters. That's what history is showing us in the past. Even in 2015, these two red quarters were almost flat. This one here, negative 0.2, and this one here, negative 0.9. Then you had the significant quarter, reverse from there, and obviously the rest is history from that point. Now, here's just a little side note for anyone that's interested in 7-year cycles or Shemitah cycles. You got 2022 as a down year. You've got 2015 as a down year. You got 2008 as a down year. You got 2001 as a down year. If you're getting the picture here, go back 7 years again. 1994 was basically a flat year with a couple of red quarters. Go back 7 years again. 1987, you had Black Monday. Go back 7 years again. You had 1980s. Market was running up into the green, but then it came into the mid-cycle slowdown in 1981. Now, if you can overlay these cycles with your other cycles, like the 18.6 year, you're going to be way ahead of the pack to understand when you might see significant years that the market is not going to make gains. 2024 doesn't seem like it's lining up to be one of those significant years where you would see losses or heavy losses like 22 or in the in the scheme of things 2015, or when you look at 2008, pretty big losses. So just a side note there, if you guys want to get into your cycles, pretty interesting stuff that happens time and time again. So we looked at the quarters and potentially what comes next based on the history there, the reds and the green quarters in a row. S&P 500, we're only seeing single-digit corrections. We've broken into new all-time highs, new all-time high monthly close, new all-time high weekly close. Can we do it on the daily? New all-time high daily close as well to finish off the quarter. Of course, new all-time high quarterly close. It seems like most are underexposed to the market and they are hoping for bigger corrections. The time for bigger corrections, at least what the market is telling us, that was 2022 and 2023. We had our double-digit corrections. We had 5 and 10%. We had 2 years underneath the previous old all-time high. 2 years. What makes you think we must see a 5 or a 10% correction moving forward from this point when we had 2 years underneath an all-time high doing double-digit losses for that period of time? It just seems pretty ridiculous to hope for double-digit losses considering where we have come from over the last 2 years. And that's why I think, again, to go to the point of most don't know what's coming up and the possibility that most are underexposed to the markets and they're not bullish enough. That's what's causing these single-digit corrections to the downside rather than double-digit corrections. And along with the single-digit corrections, you're getting this grind-up effect in the stock markets, and they can go on for quite considerable amounts of time, as you can see here as it breaks into new all-time highs. A lot of green quarters here, more green quarters, more green quarters. It seems like we're kind of at the beginning of more green quarters. Maybe it's only paused by single red quarters, maybe a double red quarter like you can see back here, or in 2011. But when you look at the overall percentage just for those periods, that might be the double-digit correction that many are hoping for, which comes after a lot of green quarters. The NASDAQ, no different, similar sort of thing going on here, and I've just got a diagonal coming up from the 2009 low connected to our recession fear lows of 2018, essentially just looking at how far the NASDAQ has run away from this diagonal line before some sort of significant correction, somewhere in the vicinity of sort of 50 to 60-ish%, with the most recent one being 69%. NASDAQ currently sits at 23% away from this diagonal. So should it get to 50 or 60%, that would take it to about 20, if that was to happen this month in April, take it to about 23,000 points. We go to 60%, take it to about 24,000 points. So there's still more room to move to the upside before things look like they're overheated compared to this current cycle out of the 2008-2009 lows. Is it only for the US stock markets? Quick look at the Aussie market. It's doing the same sort of thing here. This one goes all the way back to 1990 to those lows. You can see the moves to the upside, 66, 67, 135 at the peak of 2007, 42%, 40%. If we were to do another 40 odd percent from these current levels, where would that put us? Well, let's have a look. That takes us to about 9,700 points. Currently, the Aussie market is about 15% away from this diagonal and just breaking into new all-time highs, or putting in these closes over the last several months above the old all-time high. Same sort of story here. I think most are underexposed based on what I'm seeing here in the charts. They were hoping for bigger corrections because of what they were promised about recessions. They didn't get it, and they're just still waiting. I think this market might take off without them, just based on this breaking out into a new all-time high territory. All right, Japan, rather than repeat myself here, new all-time high, monthly, quarterly, weekly, you get the deal. It's happening across the board. Germany, again, new all-time high, quarterly, monthly, weekly, daily, all-time high prices. When markets break out into new all-time highs, it's price discovery. It is mania stage of the market. We hear it often with Bitcoin. It's new price discovery. Bitcoin could go to $500,000. It's no different to every other market. When they start to break out into new all-time highs, after a considerable amount of time of consolidation, we need to watch out to these upside prices. We are not bullish enough, I think, based on what these charts are suggesting is to come in the coming months, maybe even a couple of years. So that's a huge update for the quarter for the traditional markets around the globe. Stock markets, real estate also in an uptrend. Let's turn our attention to BTC. That's the macro look, because for Bitcoin, we are doing something that we've only done one other time in history, 7 green months in a row. The likelihood of 8 green months, well, it'd be unprecedented. We haven't done 8 green months in a row. Could it happen? Sure, it could happen. I don't have that crystal ball. But when we look at the probabilities, it seems unlikely. And if it was to occur, you'd probably have to expect some sort of red month to come relatively soon, just based on the data itself. Now, that doesn't mean, at least from this point, that Bitcoin couldn't put in a higher high and then reverse into April like it's done in the past. Bitcoin did the exact same thing in 2020, 2021 bull market. You got a March peak here, new all-time high close at $58,800. April went slightly higher by 5%, $3,000, only to reverse that month and put in a negative 1.7%. That was the period that a lot were getting extremely bullish and looking towards $80,000 and $100,000. You might have heard me talk about it before. I've got videos on YouTube and I was on other channels that were suggesting $100,000. They're those extreme hype moon boy channels that only look at the upside for the markets. They were suggesting 80, 100 grand in May of 2021. That's when we got that really big collapse in the market. So I'm not suggesting that this has to happen in April or May. The probabilities might suggest that we do have some sort of pause or correction here, but the overall macro picture is that the markets are still likely to head further up, just based on what we're looking at with the 18.6-year cycle and all of that stock market data that we've gone through, where they've just started to creep into new all-time highs. So the point for Bitcoin here is that something similar has happened already. 2020, 2021, we went on a nice big long streak of 6 green months in a row. Then April occurred and it was green for the first half, but then turned red. A month is a long period, especially as we get into the later stages of the cycle. Most have very, very short memories, and the emotions are a little bit wild because they've been underexposed in the earlier part, the earlier stage of the cycle, back here at the lows between 15 and 25, even up to $30,000 like we were talking about on the channel. This is the easiest time to be in the market because the emotions are still quite dead. The emotions are very bearish. Now the emotions are very hot. And so any sort of movement to the downside can really throw traders and investors off. They think it's all over and they start to panic. That's typically what happens in these bull markets. Like you can see with this correction, took a few months before we could start to get back to that top. So we're at the end of the quarter for Bitcoin. We've done 7 green months in a row. In terms of our swings, we are at our 6th month, and the swings are based off the lows and the highs, not the colors of the bars. So we've got 6 months of higher highs and higher lows. You can have red months within the swing, provided the swing continues on, provided you don't get a lower low in the reading here on the price. So far, 6 months straight up. Let's have a look at Bitcoin and the monthly swings. So we've now got the monthly close done, and we can confirm that we've got 6 months up with higher highs and higher lows, 1, 2, 3, 4, 5, 6. We've got 58 monthly swings in total for BTC for its entire history here on our liquid index chart. For the 7th month to be higher high and a higher low, that would put us to only 4 times in history that has happened. That was also back here in April 2021. But as you can see, it was red. That was this month here. It was a red month, but it had a higher high and a higher low. And that would put us down to a 7% possibility, 6.9% chance of that happening in April. So getting a slightly higher high. Now that last time it happened, it was 5%. Here it is. From March to the April peak was 5.1%, so about $3,000 higher. What if March into April was to do the same thing, go 5% higher, thereabouts, maybe $4,000 higher? That would put us out to about $78,000 Bitcoin, which is also one of our resistance levels above. So where does that $78,000 come from? Well, it comes from our entire range here, from the ETF low, that was when the market had its ETF peak, into that crash of 21%, basically the exact same thing that Bitcoin's been doing the entire way up. There's a low, market ran up into this current peak here of 74,000, which we have not been able to break above yet. We had the 6 days down into the low here at 60,700 thereabouts. And then you project this same range from this low, and we have our points along the way, our price points here. You got 50% of this move. An important place to watch for any sort of resistance, that's at $78,400. If it was to do the exact move again, so this into that peak, that would take Bitcoin out to $96,000. But first things first, it's got to break through the all-time high, or even closer if we look at the shorter term, 72,500. We'll get to that in a moment. But essentially the top there, 74,000. The 50% level, 78,400. And then I've got a 1 back here, $81,300. That is a longer term view or price projection, looking at the entire bull market range of 2021, projected off the cycle low of 2022. So this entire move here, projected off this low, if Bitcoin was to run the same amount in dollars from that low, that would take us out to $81,000, $81,300. That's this line right back here. So as a percentage, Bitcoin is about 10% away from the 78,400 and about 15% away from that $81,300. So April, let's have a look how it responds to those peaks, or at least to these price targets, and whether it peaks or does it slice straight through and close above it. That is going to show more strength to the upside, and we'd look to those next price targets above. Should we find resistance at around that $78,000 to $82,000, as you can see here, then that might spell at least a short-term pause or correction. And a pause can come in many forms. A pause could be several months, couple of months, few weeks, but essentially within a price range. Anywhere between $50,000 and $80,000 is going to be absolutely okay for Bitcoin. Does it get to 50? I don't know. Maybe it only drops down to $60,000. The point is, anything within that realm is still going to be safe for the bull market and continue on with the mega real estate cycle. Now, we've still got alts and ETH to have a look at, but what happens to Bitcoin during the next 6 months? Well, let's have a look. April to September. Historically speaking, you've had a hit rate of about 54%. If you buy it on the 1st of April, sell on the 30th of September, you got about 50-50 chance. However, if we look annually here, buying now for the next 12 months, you're at about a 69% hit rate that Bitcoin is going to be higher in 12 months' time. Now, if we take out the bear market years of 2022, 2018, 2014, well, now we're fudging with the numbers, but we have a much higher probability that the markets are going to be higher again. Buying now for the next 12 months, 90% of the time is higher. So even if there is a correction over April, maybe into May, maybe it lasts for a bit longer, as we've seen before, then going 12 months ahead, the chances are 9 out of 10 times you're going to see green. Now, there's a lot of data to get through in today's video, so thanks again for sticking around this long. We're into altcoins, ETH, then the forecasts. Hit the like button and subscribe to the channel if you haven't already. As you can see, it does take some time to get through the data itself, so I appreciate you guys, if you're still here half an hour into a particular video. Hopefully I can make it as entertaining as possible and not too dry. Total cryptocurrency market cap minus Bitcoin, minus ETH, minus stable coins, where we at, new fresh high on the weekly close, going all the way back to March of 2022. So essentially a 2-year high here. We're getting very close again to that tipping point, 680 million. The main thing I've pointed out here with this particular chart is breaking above this level here generally sends us to outer space. We start to go on mega big runs. Typically, you'll see single week corrections. You've got red weeks here, but that's just enough to scare out the majority, and then the market sort of takes off again. Typically, we do see a significant correction even after we break through the tipping point. We've got red weeks here, but like in the last cycle, we saw a very big correction from 2017. There was also a period through the middle of 2017 that took quite some time. The market was still climbing up. We still had this climb up effect here, but there were still significant corrections along the way after big altcoin pumps. Now, I've pointed out before that I think we are tracking most similarly to the 2015 through the 2017 cycle compared to the 2021 cycle. There are some similarities across all cycles, but it seems like we are moving more towards that sort of 2017 cycle with a sprinkle of 2013, as I've shown in previous videos, when it comes to the consolidation. And just looking at the consolidation again, if we were to get that pullback, as I pointed out, with the possibility of a red April or at least some sort of period of sideways, you can see through here, there was several months after the market peaked. So you had this big run up into March, April, pullback, and there was 5 months that it went sideways before you had that final peak. I'm not saying it's going to be 5 months, but it's just a reminder that even though we are still extremely bullish, the market can pause. It can put in these sideways periods before you get these mega moves to the upside. Previous cycle, 2017, you had a month here, a month there. Market continued on. You had that June peak. Again, market continued on from that point after its correction. And so corrections don't necessarily have to be the worst thing in the world. They don't have to be 50% down, but they might take the steam out of the market, which is a fantastic thing for that next stage of the cycle. Now, ETH is in a very similar position here, closing above 3,600 points, which was the monthly swing top. So that was the period through April of 2022 when the market collapsed from there. So we're definitely putting in stronger signs here for Ethereum as well. It is lagging behind Bitcoin, but the ETH BTC chart is showing that it's trying to at least form its base, maybe put in another quick flash crash to the lows here, ETH BTC to 4.8 million Satoshis. Essentially, this is going to be one to watch over this month of April and possibly over this quarter as well. So quarter 2, 2024, to see whether this thing does base and hold up here before it starts to push higher, or if it breaks down. That might not be the best thing for ETH over this coming cycle. So pay very close attention here. It is walking a fine line for this next stage of the cycle. Now, a massive review for our top 13 financial forecasts for 2024. I will do in a future video this week, along with Bitcoin price predictions as well. Some of the biggest numbers, some of the smallest numbers for this particular cycle. So make sure you hit the like and subscribe button. This video has gone on long enough, and I thank you very much for sticking around throughout these mammoth videos. Till next time, take care and peace out.